The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 20th, the fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary day, an extraordinary weekend, an extraordinary life. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening at the normal time frame at 11:07, we're going to make today's show as pertinent as we can for you. But if you are listening live, we would love to hear from you. So you can give us a call at 877-927-6648. Now, if you have a question but can't call in, you can always send me an email. For that, you send that to Steve at TFNN.com. And if you'd be kind enough to put radio show question in that subject heading. Of course, if you're inside our Tiger's Den, well, then every and any ping will do. So let's go ahead and get this show started on 8:08 in the morning on January the 20th. And right now, if we take a look at U.S. equity futures, they're all trading the upside. Dow futures up 90, NASDAQ futures up 91, S&P futures up 15, Dow futures up 37, the Russell's up 4. Over in Asia last night, it was a sea of green. The Shanghai Nikkei and the Hang Seng finished higher. The S&P 200 in Australia finished higher. The biggest move was in the Hang Seng, up 1.8%. Now, I believe the Hang Seng will complete a TD9 count top on Monday. Over in Europe, the DAX is up 77. That's 0.5%. And the FTSE is up 20. That's 0.25%. Gold is up $6. Silver's up 26 cents. The U.S. dollar is up 33 ticks. So you got the equities higher, gold and silver up higher, and the U.S. dollar index higher. Something to think about. If we take a look at U.S. dollar indexes trading out at 102.14. In fact, a quick peek over here at our market update charts, just to get some perspective overall on what's going on inside the markets. If you take a look at the ES Mini up in the upper left-hand corner, what you'll see is prices consolidating with inside its bullish structured profile. The support area here is 38.83. You'll notice that this current profile that formed a couple days ago is above the prior profile. That tells you about a trending market to the upside from a profile perspective. Now, that trending market to the upside is likely to continue, especially if that spot volatility index remains below its 50-day exponential moving average. The 50-day is 2207. Right now, prices printing out at 2043. The NQ also forming a new profile, bearish in structure. So yesterday's close was below the center of that new profile, 11,457. We're trading right into that right now. Right now, we're at 11,440. A second close below this 11,457 area would signal the intent of the NQ to get down to the bottom of its profile at 11,053. Now, you should notice that the new profile that formed a couple days ago is also above the prior profile. So from a trend standpoint, that trend profile-wise has changed to the upside. U.S. dollar index, you can see that has continued to find support at the bottom of its profile. That's at the 101.86 level out there. Another bullish reversal candle today would form a Rhodes Momentum Indicator bottom signal. So you got the U.S. dollar index finding support at the bottom of its profile, while gold has rejected resistance at the top of its new profile, and that's up at the 1912.50 level. So the next price target for Goldilocks would be the A to B equals CD pattern that I've drawn in here, and that'd be at 1954. Silver still struggling to take out its Rhodes momentum indicator top. It would do that with a close above 24.52. That would then set up a further move higher because price would also be above the top of its daily profile. Light sweet crude, new profile that formed a couple days ago as well. Price consolidated with inside of that. Support at 77.34, resistance 81.77. Tough to be long natural gas. Natural gas is trading below daily, weekly, monthly, quarterly profiles out there. This is the weekly time frame chart. It's a weekly time frame chart with the daily profiles. They're the ones that are closest to price. But you can see that price continues to find resistance at the bottom of that profile, $3.40. What's needed here is big old bullish reversal candles, daily, weekly, monthly. You take one at least on a daily. You don't have that today. I'd say be very careful being long natural gas. I know it looks tempting. I know it's lower, but guess what? It can continue to move lower. And that's what the technical patterns are telling us. If we take a look at the 30-year Treasury, if it were to close above 132.15, that would then trigger an A to B equals CD to the upside. It does have a prices trading above profile, so it's slightly bullish. It's certainly not a bearish set of patterns that we have out here, other than price finding resistance, making that 100% move of a move, getting back to that 132.15. So that's an overall view of the markets. If we wanted to take a look at one of Stevie's systems here. Give me a moment. This is a set of this is a table that subscribers, it's not going to pop up right this second. I got to change over to it. That subscribers get each morning. And so we'll just go, and this uses this exact set of tools that you and I had just been taking a look at to identify where support resistance is at. And it's the exact same set of tools that led to being the number one market timer for the S&P for bonds in 2018 and number two in 2019 out there. And so if we're asking the ES Mini, what's its current condition? Now I show the current conditions here for the daily, weekly, monthly, and then the intraday time periods, 15, 30, 65, and 130. So for the futures, I use a little bit different time frames, but for the equities, I'm always using that 65 and 130-minute time frame charts because we're always looking for equal bars. For the futures, I would use the 60 and the 120 out there. But either way, it shows you what the conditions are. Right now, for example, on the daily time frame, it says we're in a consolidating bull type market, consolidating with inside those profits. Same with regard to the NQ. Remember, we took a look at profiles, how profiles had formed above the prior profiles. That gives us a trending to the upside standpoint. Russell is bullish. And the Dow says that it's a bull over. Now, it's bull over from a daily standpoint just simply because price busted through the bottom of its daily profile. We haven't shown that chart yet. We probably will during today's shows. But this gives you a good overview on all kinds of instruments, whether it's commodities, whether it could be live cattle, corn. I also cover all the soft commodities inside the newsletter each and every day, all the sectors with inside the S&P 500, what they're doing, what type of patterns, topping or bottoming patterns might be present. So on these daily TD9 counts, the stars are the ones that you're paying attention to because they're telling us about potential topping signals or bottoming signals that have formed. I give you all the daily wave counts, both to the upside and to the downside, as well as where there's support and resistance. So another reason to be a subscriber at Mastering Probability. So you have all that information right at your fingertips each and every day. So I'm going to close that down, and let's go take a look at the ES Mini. So if we take a look at the ES Mini, what we'll see here is prices below really key area of support, that green oscillator and change line. So with price below that level, and if it regains it, that would mean, let's say it closed above 39.49 today. If price regains it, okay, great, then it's on its merry way. It's got resistance up to 40.35, should go target that level. But as long as price remains below it, it may be signaling to you and I it wants to go test the bottom of that new profile. 38.83 is the number. This is Steve Rhodes with TFNN. We'll be back in just a few.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kickstat's Tiger Forex Report. Teddy Kickstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. It is 8:18 in the morning. Thank you for listening live if it's at 8:18 or even on the replay at 11:18 in the morning. Currently, we have U.S. equity futures pointing to the upside. The Dow futures are up just 2, but the NASDAQ up 79, the S&P is up 11, and the Russell's up 2 points. Now, we're going to go back. We're taking a look at the ES Mini out here. And the first thing we're going to do, because we got futures trading to the upside, what's that mean? Should they continue to move higher? Well, here is the TAS market profiles for the 30-minute time frame for the S&P 500, for the ES Mini. What we can see here is it is in a bullish configuration. We had a lot of chopping around here with price, the green line and the red lines crossing each other. We had a little bit of a breakaway from that level. That means that took place at about 7:30 this morning with regard to market breadth. So this chart here is showing us about market breadth. What I mean by that is inside the S&P 500, there's more than 500 instruments inside there. What we have right now is 94 instruments trading above the top of a profile. Top of a profile is resistance. That is where sellers are at. So in that case, we can just the simple observation is that it is in breakout mode, moving to higher price. There may be resistance overhead, but right now we know price is above profile. Whereas there's 211 instruments. That's weird. How can that possibly be? Says there's 211 instruments below profile and 101 above. So I haven't had that situation occur. So which is right? And I tell you the truth, I don't know which is right. Let me switch over here. Let's switch over to the NASDAQ. And then, so let's see what it's showing us. This is the NDX 100. It'll take just a moment to populate. This shows 31 below, 42 above. So this isn't a proper configuration. So inside the NQ, 42 instruments trading above profile, 31 below. Let me update now. I just want to go back here and update the S&P 500, see if we can get a we can't. So I can't. So okay. So at this stage here, we're going to have to scrap. Everything's happening for us, and that happening for us says we've got to scrap this because I'm not sure what the ES Mini is doing from a TAS market breadth standpoint for its 30-minute time frame. But I can tell you what it's doing when we take a look at the chart. So let's open up the 30-minute chart. What we'll see here is a Rhodes momentum indicator bottom. This pattern formed yesterday morning at noon. yesterday at noontime. Well, actually completed at 12:30 when we got that bullish engulfing candle out there. But that took price right up to resistance, or the resistance area. That's its TD9 count breakdown area, 39.4175. Price right now is just in between its profile on a 30-minute basis. It is bearish in structure. What that means is that we have resistance at 39.32 and 39.40. So, ES Mini is trading up into resistance right now. We're not sure about the TAS market breadth for the 30-minute time frame. What we do know is that if price closed above 39.4175, and I'd say that's the number to write down on your pad of paper, if it closes above that, the 30-minute time frame is telling you about a change in trend. Now, that change in trend might only take us to 39.67, and we don't have that just yet, but I would write that number on my pad of paper. Likewise, I would write down yesterday's low, and yesterday's low is 39.0174. If price takes that out, it'll negate that Rhodes Momentum Indicator bottom pattern out there, and that would suggest lower price. And again, that lower price being that 38.83 level. Well, Stevie, can't you give me more information and tell me exactly where the market is going? No, what I can do is I can share with you exactly the patterns are in place, the line of demarcations level that we need to be watching so that it will assist us with regard to what the market's next intent is. Right now, it's basically just consolidated, even on a 60-minute time frame. Here we've got wave number 7. That's letter G. Just a very small portion of the Chapman wave tool out there. So you get that in Rhodes Momentum Indicator bottom and a TD9 count bottom. Do 2 or 3 bottoms make it a more solid bottom? No, it just makes it a bottom. They all came together. Price did what? It went from that bottom all the way up to resistance, the first or the second level or the first level of resistance being the top of its profile. Now that profile has changed since then, but here you've got 39.4450 as its TD9 count breakdown level. If price were to close above that, that would tell us about a change in trend. Right now, price is consolidating with inside its new or its current profile. That's a 60-minute time frame. So what other information do we have out here? Really not much. Really not much. What we do have is we can say that we don't have any kind of breakout signals on the intraday time periods out there. And so the levels to be watching again through the day to the upside are going to be that 39.4175, 39.4450. Let's make it the 39.4450 area. And then we've got yesterday's low to the downside. And that's what's going on inside the ES. We do have a couple of requests that have come in. So let's get to those, and we can always come back to these markets out here. The first request coming in from SNP inside the Tigers Den, who wants to take a look at Tesla. TSLA is the ticker symbol. Tesla in the pre-market just fired off a trade at 129.16. Closed yesterday at 127.17. So it's up $2. What we can see here is that if Tesla is able to spike above the high from 2 days ago, 136.68, we're only 129.18. If Tesla can do that, S&P, if it can do that today, or it can do that if it can do that today, then it may trigger a TD9 count. The reason I have to say may is because price also today would have to close above 122.40. So those are your parameters that could trigger a TD9 count top. If not, and if we don't get that TD9 count top, then price still remains bullish out here because price on a daily basis got a nice Rhodes Momentum Indicator bottom, and price remains above the top of its daily profile at 124.48. Okay, Stevie, I've got that with you. On a weekly basis, what I'm showing you here is the C to D leg of an A to B equals CD to the downside. That was confirmed 3 weeks ago when a bullish hammer candle formed. So what price should do now is make its way up to its red oscillator and change line. That happens to be right about where the top of its profile has formed on a weekly basis out at 140.65. So if price can stay above 124.48, would you really like to see here, if you're long Tesla, quite frankly, I think, you don't want to see a TD9 count pattern form today or on Monday out there. If you do, that's going to suggest at least a retracement. Now, that retracement might only be back to 124.48, but more likely than not, it would be telling you about a retracement back to around the 111 area. So we don't have that out here. You've got a solid bottom, both on the daily and the weekly chart. We do not have a solid bottom pattern on the monthly chart. And so if the daily and weekly bottoms fail, then what Tesla would be signaling to you and I is move back to the 56.94 area. That's its TD9 count monthly breakout level. On a 30-minute time frame for Tesla, just see what we've got out here. Where did that leave us last night? Didn't leave us much, but 129.18 is where price is trading. So that actually could be setting up an intraday. Yesterday's high, or this high out here that I'm looking at, 128.30. I take that back. So no, I don't take that back. If price in fact does open right now 8:25 in the morning, above that you'd get a short-term A to B equals CD to the upside. So what that would do, S&P, that would look like this out there, and no guarantee that's going to happen at 9:30, but right now as of 8:30 or so, 8:25, that's the signal. Now that 1-to-1 price projection area is in around the 131-ish level, but this retracement much less than the 0.618. So I would say that would turn into an expansion on a short-term basis of A to B equals CD pattern. Now that could just simply be set up a Gartley sell. You can see a nice TD9 count top that we have out here. This again, this is 30-minute charts. This just doesn't impact the signal that we just took a look at on the daily and the weekly. This is giving you the play-by-play, the diving down into the minutia as to what's going on inside of Tesla. So S&P, I hope that helps you out with regard to the Tesla charts out there. Thanks so much for the early request and joining me for tea and crumpets. Speaking about tea and crumpets, I'm not really sure what that means out there, but when we get back from this breakout here, we're going to go take a look at high-grade copper for Dr. Z inside our Tiger's Den. Of course, I'd love to hear from you as well, 877-927-6648, or send me an email. Send that to Steve at TFNN.com. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're taking a look at high-grade copper right now. Those are the charts. We got our multi-set, multi-panel time frame out here. So what John is looking for, just trying to understand what the charts are telling us, technical patterns here for high-grade copper. So let's start with the monthly time frame. That's the upper left. What you should see here is prices trading above that green oscillator and change line. The green oscillator and change line tells us that we have a rising price oscillator above zero. Those are bullish conditions. And this is on the monthly time frame. Price is also above the top of its bearish structured monthly profile. That too is a bullish condition out there. So that says that price wants to move higher. Well, move higher to where? Well, if we look at the weekly time frame, you've got a beautiful A to B equals CD pattern to the upside. That C point was taken out with a wide-ranging bar. That was last week. Price does not end you typically with a wide-ranging bar. Now, that price projection has basically been hit, and that's at the 435 area. But price is along that is on the left side of that C to D. So I've used the exact same angle, A to B, as I have from C to D. You got to do that. Well, you can do whatever you want to. If you do that, then you'll be able to understand whether you're on the strong side or the weak side of that C to D leg. So this is on the strong side. And what this would tell us, John, is typically this should do more than a 1-to-1 A to B equals CD. So the weekly chart, very clear. The monthly chart, also very clear. The daily chart says, well, hold on a minute here. I might have a little bit of a pit stop. I need to pull over to the rest area, do a little bit of resting. Why is that? Well, you can see I've got the C to D leg drawn in there. We don't have any kind of bearish reversal candle. We don't really need that any longer on the daily time frame. Instead, what it did, or what it will do today, is complete a TD9 count top. Now, at present, it's bar number 8. That was from 2 trading sessions ago. That is your resistance level. That's at $4.35. So a close above that would tell us about a strong momentum move to the upside inside of high-grade copper. Tell us that to confirm that we've got a more than a 1-to-1 A to B equals C to the upside on the weekly time frame. Otherwise, you also have both profile and daily oscillator and change line support. And that's at about the $4.18 level out there. The actual oscillator and change line of 4.1725. John, you know that number's going to go up and down as price moves up and down. A pullback and a test and rejection of that green oscillator change line would be a bullish signal. Now, we go take a look at the play-by-play, the intraday time periods out here. 30-minute chart, I don't see much of anything at this stage here to really report on. I don't see much on the 60-minute chart. The 120-minute chart has a nice TD9 count bottom. So let's open this chart out here. So here's the TD9 count bottom that had formed. It was on following bar number 9 out there. But price is, not been doing much. So I think what's happening here, it appears that what's happening is that the market respects the TD9 count on the daily time frame. We see a bit of a pause, maybe it's just a sideways move out there. But overall, longer term, the charts for high-grade copper look muy bueno. So Mr. Z, Dr. Z inside the Tigers Den. I hope that helped you out. If there's any additional information that you need, please let me know, and we'll get that to you. Let's go to a next question that came in. This is from Coder inside the Tigers Den. Thank you, John, for that question, and thank you, Coder, who wants to go take a look at the energy sector. So let's get back to those charts. That would be the XLE. And if we take a look at the XLE, there's a couple things that we can notice on the daily time frame. First of all, price was in a consolidating pattern. That consolidating pattern, well, let me just open this up. I'm assuming that was, so here was the consolidation originally. Let's move this line. There was a consolidation pattern up in here. Once you break through that consolidation pattern, then you get a measured move. So here we've got that. Let's just get rid of that as we speak right now. We don't need that in here. What we do have right now with regard to the energy sector, Coder, is that price on a daily time frame is trading above its green oscillator and change line, and it is trading with inside a new profile. That new profile has support for you at $87 even Steven. This is the daily time frame. Resistance at 90.55. So everything here at this moment in time looks pretty bullish because price above that green oscillator and change line, and it's just consolidating with inside the daily profile. If we take a look at what's the XLE doing right now in the pre-market, let's see here, XLE, you got oil that's up just a tad, about 45 cents. Energy sector trade 89.65, not much higher than where it had closed yesterday. If we take a look at the weekly time frame, what do we have? On a weekly basis, if in fact price this week can close above its oscillator and change line at 90.38, again, it's got to rally a little bit more than where it is. The weekly basis chart would then signal that price is getting ready to get back to test its highs from back in November, and those highs being in the 94.71 area. Now, there was 117 million shares at that swing point from back in November the 18th. So we're in a short trading week out here. For the week so far, we've done 53 million shares. But you're moving into that with lighter volume at this stage of the game. But nonetheless, a close above that green oscillator and change line, that would be a bullish signal out there. On the monthly time frame chart, still has that TD9 count top. What you're looking for ideally here, but price above its green oscillator and change line and the top of its profile, that says long-term stay inside the energy sector, the XLE. If price does close above 93.31. Then it will be a breakout party to the upside inside of the energy sector. A to B equals CD. Yeah, there's that would be a large A to B equals CD. You say, well, you came up with 96. I would say that the A to B equals CD pattern is really the one that you'd want, which is price taking out the Rhodes Momentum Indicator top that had formed on November the 14th. And that's up at the 94.71 level. If that gets taken out, Coder, now I don't know if this is the A to B equals CD that you wrote in there. I don't think that it is. There's your A to B point. We'll just simply move this over to where the C point is at out here. Well, I'll try to move it over there. There we go. We use Stevie's cut, paste, and assemble method. That usually works. That would give you a price projection. I got to really pull this thing back. That would be a 1-to-1 A to B equals CD. That takes you up to the 108 level. So the XLE has that potential, but right now it's really got to take out that resistance level. That's the one I'd be paying attention to. That would be November the 14th out there. And the price takes out that high, then it's really on to something. So, Coder, I hope that helps you out with regard to the energy sector. A quick peek here. Let's just see how the energy sector has been responding on the consecutive dance steps out there. 2 or 3 to the upside, 2 or 3 to the downside. So it did have this big move of 7 consecutive trading sessions when it did form its bottom. That was back here on the trading day of December the 19th. Ever since then, the missteps to the downside have been either we've seen a Texas 4-step, one Texas 2-step, and then we just had a one-hit wonder out there from a couple of days ago. So, again, nothing else that I see out here inside of the energy sector. So I hope that helps you out, Coder. Thank you so much for your request and joining us early in the morning. We've got another request out here. This is from Ron, who's asking about natural gas. What was the question out here? Well, first, let me do this here. Let me get the natural gas charts up on my screen. So trading, let me get to the natural gas charts, and let me get back to the question out here. It went something like this. Hey, Steve, natural gas futures, what is the rationale for a possible move in natural gas down in the 2s out there? So if you're asking me fundamentally, Ron, I can't answer that question. Not that I wouldn't like to answer that question, but I can't answer that question. I can sort of answer it fundamentally, though. But how I would do that is I would go pull up, and I'm going to do this here. I've got to log into it. So if you give me just a moment, I will log into the SeasonX charts. So give me a moment to pull that up. Let's ask SeasonX what the natural gas typical pattern is year to year, okay? So we've got this. We're logged in. Let's call up natural gas out here. And let's let this chart help us understand whether that's a possibility that price could still head lower. Let's not focus on the dollar amount. Let's just focus on the pattern. Hey, Stevie, stop bloviating out there. We're getting ready to go to break, and you haven't even brought that up. So I'm going to bring that up on my screen here. It's not showing, but I'll bring that up on my screen. We come back from this break, we'll be able to see that. Ron, because he's inside the Tiger's Den, he'll be able to see that right away as soon as I post it. Steve Rhodes with TFNN. We're taking a look at natural gas.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're going to take a look at several different charts for natural gas. Just trying to answer the question for Ron inside the Tiger's Den. You know, what's the rationale for a possible move in natural gas down into the twos? So here, when you pay attention, when we're watching this show, this is all about technical patterns out there. I believe that the most fundamental aspect about taking a look at an instrument is what are buyers and sellers doing. And for that, we use our technical tools out here. We can identify support and resistance. And when prices are below support, boy, that tells us that price wants to move lower. However, we always look to see if there's some kind of bottoming pattern, some type of bottoming signal. Those could be Rhodes momentum indicator signals, could be a TD9 count, could be a Chapman wave count, it could be an A to B equals CD pattern. Well, here we take a look at natural gas. You've got the daily, weekly, monthly, and quarterly charts up here. Prices below every single profile. So, Ron, the very first thing that we know is what buyers and sellers are telling us is they're looking for lower price. It's below support. Why could it go to twos? Because it's below support technically. Technically, we've got these A to B equals CD patterns out here. So if we take a look at the daily, they're really almost the same for the daily, weekly, or monthly. Doesn't matter what we use out here. Really paying attention to the daily time frame. So on the daily time frame, for natural gas, there was a TD9 count bottom that completed out here on January 13th. Bar number 8, not shown right now, was on January 11th. That could have or should have been a bottom. But what price was unable to do, Ron, was get above resistance. I've shared with folks many times that we take a look at these profile levels. They can really be of assistance to us because sometimes they set up bullish or bearish versions of the profile. In this case here, it was a bullish structured daily profile that formed. When counter trend moves take place, they will find resistance at the center of that profile. In this case here, it was $3.98. On the trading day of January 12th, price got up to $3.95 up there. And then it backed off, and now it's below profiles. So I'm not saying that we can't get a bullish reversal candle today. We can. If we do, then that would confirm a buy the D point pattern. You still got to deal with this resistance level, though, at 398. I don't know whether price will be able to take that out or not. What you do know, is that is a significant resistance price level at this point in time inside of natural gas. Now, even if we got a bullish reversal candle today, we would not have that on the weekly chart. The weekly chart is at least kind of at its last bastion of hope, which is a small trend line level of support out there. So that's the first thing. The second thing, and why could it go lower? Well, so these charts are telling us that it will. at least at this stage. We get a bullish reversal candle, Ron, then we have a different interpretation again, but we still know that resistance is up there. Why could it also head lower? Well, if we take a look at just the seasonal chart, this is over a 32-year period of time out here. This red line is showing us where we're at today. The red line is saying, hey, we should see some type of very short-term bottom with another little counter trend move. That should then stall. So we've got that number that's in place out here. And then natural gas is likely to head lower into the end of February. So from a very fundamental standpoint, the way that natural gas trades is over a 32-year period. It doesn't form a, let's call it the winter bottom, until the end of February. And then it moves higher into the April, May timeframe out there, just kind of consolidates sideways. Now, that's the last 32 years. You might say, Stevie, I don't want the last 32 years. I want the last decade. Okay, let's put up the last decade. I don't know what it's going to show. Well, here, now we know what it shows. What it shows us here is that natural gas typically doesn't bottom until February 26. 10 years. Who needs 10 years worth of data? I only need 5 years worth of data. Okay. Here's 5 years worth of data. Tells us that we typically don't see a bottom until about the second week of February. So, Ron, if we just take a look at fundamentally how natural gas trades, what do you think? And we take a look at the technical patterns that show we've got these A to B equals CD patterns to the downside. Those, and we're below all kinds of profile support. I would just ask you, you tell me, you be the narrator here of these technical patterns. And now, that's a very powerful tool, that Seasonix tool, just to understand seasonally what takes place out there. So now let's switch over and take a look at the white background charts and see what additional information they're providing to you and I. So here, if we're going to see some kind of a turn, what we would do is we'd see those turns on the intraday time periods. Now, the shortest term time period that I have up here on this set of charts, because in this case here, I wanted to show you the longer picture. If we take a look at a weekly chart, we're only in bar number 6 of a TD9 count. There's no other bottom signal out there. We took a look at the A to B equals CD to the downside. If we take a look at the daily time frame, again, I mentioned that TD9 count bottom here. That was negated a couple of days ago. That was negated on the 18th. You can see it still has a Rhodes Momentum Indicator bottom pattern here that's triggered, but needs a bullish reversal candle. And a bullish reversal candle is not a green-bodied candle. So let's just make sure that Stevie's clear on that out here. So no signal there. So as we look at the shortest term time frame that I've got on this panel here, it's a 30-minute, and I don't see any kind of bottom inside. I don't see any kind of bottom pattern. I see counter trend moves running into resistance on a 30-minute basis at the top of its profile out there. So I can't tell you why. I wish I could. I can't tell you why. I'm a technical pattern recognition trader, and I will say that when I hear people, on the news media talk about, they try to diss technical trading, and they call themselves just fundamentalists. I just look at myself cross-eyed, and I'm not really good at the cross-eyed thing out there, and say, what are they saying? The most fundamental thing about chart analysis is what are buyers and sellers doing. That's why Tom is the king of volume out there, because he uses volume to be able to understand what the market's communicating to us. He already does that. You don't need me to repeat what his show might be telling us. David White took that volume to another level and created that power law vector indicator. Now, that's a real cool tool, because you're not just looking at one day's volume. You're looking at a volume in a leg. So that really provides you with a ton of information. That's a reason to utilize that timing the trade charts tool out there. So, it's the technical patterns and even the seasonal patterns suggest that natural gas could and should head lower. So I hope that helps answer the question out there. Like everybody, I'm looking for a bottom, but I think it says that we just simply need to be patient. But if there is going to be a bottom signal, we'll see the turns take place on those shorter term time frame charts first, and then we will go from there. So I hope that helped you out, and you are most welcome. We had a request from someone to take a look at the euro. That was Bob in Spokane, and wants to take a look at the euro US dollar. So let's switch over to those charts, see what they're communicating. So whereas we thought that the euro was totally dead out here, I'm going to take a look at the weekly chart out here. What this did was this formed a Rhodes Momentum Indicator bottom pattern out here. Most importantly, what price did last week was it took out its TD9 count top. That TD9 count top was at 107.36. So the weekly chart is suggesting that the euro is not dead just yet and that it may want to rally further. Now, if the euro does that, because it represents 57.6%, you'll have to check me on that. It's somewhere right around 57.6% of the weighting inside of the U.S. dollar. If the euro continues to get stronger, that would be moving higher, and that's what the weekly chart is suggesting to you and I. And the U.S. dollar index should move lower. Well, if we take a look at a monthly chart out here, they just pull this back and you say, geez, Stevie, that has got a lot of gobbledygook on it. Well, I do have a trend line. This trend line from the bottom out here, this is one worth drawing on your charts if you are tracking the euro-US dollar on a monthly time frame. And we can see that price broke through that level. One of the reasons we thought that the euro was toast, and longer term it likely is, was because it broke through that TD9 count bottom pattern out there. It did that during July of 2022. Well, it's got to deal with that resistance, that trend line resistance. So even though the weekly says, I want to break out and move higher, we'll come back from this break and look at the euro. Steve Rhodes with TFNN.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we're taking a look at the euro out here. We took a look at the weekly chart. The weekly chart shows us that it's in breakout mode. So that takes us up to the next higher level. That would be the monthly time frame. The monthly chart says that what price needs to do is get back above this little rising trend line that it broke through out there. That becomes was originally support. Now that support level can become resistance. As far as where's that priced right now, it's at about the 109.21-ish area out there, right around that range. But just go note that on your your chart, and that would be an area to watch. If we take a look at the daily time frame for the euro, what this needs a bearish reversal candle to confirm a sell the D point pattern. A number of different A to B equals CD patterns out here. You could even see it's a possibility of a 3 drive pattern, but even that's going to need a bearish reversal candle. If price trades above its green oscillator and change line, that would be at 1084. That would suggest a further rally is likely. If we take a look at some of the shorter term time frame charts out here, the 30-minute chart for the euro, we can see that price has moved lower. That's one of the reasons that we're seeing the U.S. dollar index up 31 cents right now. But and it does not have a bottoming pattern that is in play. It could form a TD9 count bottom by about 10 o'clock this morning, but it will need a spike lower in order to do that. So that's what I see that's going on with the euro. Bob, I hope that helped you out with regard to that information. We have one more request that came in. This is from Hector and Patty. And Hector and Patty want to take a look at the XLE, or they want to take a look at Schlumberger. So Hector and Patty, we did the XLE earlier. We only have a minute left here, or less than a minute, so I'd encourage you to go back and listen to the replay. With regard to Schlumberger, 2 days ago formed a sell the D point pattern. It did that when it formed that bearish engulfing candle. That's taken price so far. It's just simply back to the its oscillator and change line. If it can remain above that level, which is 56.95 right now, its condition will be neutral. It'll become bullish if price takes out the high from 2 days ago. That would be at 59.45. It would become somewhat bearish if we were to take out 54.53. That is the bottom of its new profile out there. So Schlumberger on a daily basis, it's neutral. The weekly basis, it's bullish. The monthly basis, it's bullish as well out there, with price trading above profile levels and above their green oscillator and change line. So folks, thanks so much for joining me here early for Tea and Crumpets. Please have a fabulous weekend. I'll look forward to seeing you on Marvelous Monday. Be safe out there. Think peace. We need peace in this world. We don't need war. Take care, folks. We'll see you on Monday.